Ladies and gentlemen, welcome back to the channel. The stock market today continues to rip faces off of the short sellers. Technology is outperforming now in an official bull market, and this stock market is really disregarding a lot of the red warning signs that there is going to be an imminent crash over the next couple of months. Now, we're going to get into kind of what is happening today in the markets, what's causing this technology face ripper here that we're seeing in 2023. As well as that, I do want to get into everything that is happening with AMC Stock today, because there's some pretty interesting things going on, including the cost bar rates that continue to go higher. So with that being said, the work is cut out for us here in this video. I don't want to waste any time. Hit that like button and subscribe to the channel if you have not already. So first things first, economic data that came out today. That is going to be number one. And first and foremost, the economic data that came out today. Let's go ahead and refresh this. PCE. That's the main thing that is really continuing this technology face ripper. What has been going on this whole time is essentially people are fearful of economic activity and growth slowing down. Come here, Khaleesi. Economic growth and activity slowing down, and people think technology is immune to that. Now, to some degree, maybe, but to a broader slowdown, absolutely not. And that's a huge reason why people started to kind of bid up tech before the banking crisis. Since the banking crisis, people are looking at their portfolios, they're looking at equities and stocks in those portfolios, and they're saying to themselves, what companies, or which companies I should say, don't need to raise capital, that have internal funding more or less that can support themselves. And large mega tech fits that bill. And that's exactly why you're seeing kind of these two reasons playing into this technology boom so far in 2023. And this is very much a bubble at this point, considering where earnings are going and where valuations are. So I would be very careful buying anything right here. I have a significant amount of cash personally ready to buy when people come into more or less a reality check on what is going on in 2023. But hey, maybe I'm wrong. Maybe there's a chance that earnings hold up. Maybe a recession doesn't come. Maybe the inflation goes down and economic activity remains fine and the banking crisis is all good. And the markets, you know, maybe technology is reasonably valued. I doubt that to be the case, but it's possible. Now, PCE today, it rose 0.3% in February, less than expected. The expectation was for a 0.4% gain for PCE month over month, and that's the number that really mattered here. And while it's still showing inflation is high and it's not falling as fast as people would have liked, it's a step in the right direction. It's getting closer to a obtainable 2% inflation, average inflation target, right? So I think that is why the markets are looking at this bullishly. Now, this isn't a huge day. Technology is having a massive day today, though. Absolutely insane. Like I said, a face ripper rally. The NASDAQ is up 1.22%. In reality, stocks like Tesla are up 6%. Other stocks up similar amounts. A very big day overall. S&P up about 1%. The Dow up almost 1%. And the Russell 2000 up 1.35%. All in all, it's based off of this PC that you're seeing, as well as the flows and rotations of money right now. People are really concerned about liquidity, and that's a big reason why people are going into these stocks that have $50 to $100 billion of cash that don't need to finance from anywhere else, that don't have a liquidity problem as of right now. So there is that. You also had personal spending month over month for February. That came out today as well. Came in at 0.2%. You were expecting a 0.5% increase, so still positive, but not by much. And then you had personal income month over month come in at 0.3%. Expectations were 0.4%. So better data, I guess you could say, on the personal income side, a little bit worse on the personal spending side. Now, you also got Michigan inflation expectations. Those fell off of a cliff as well for the 2-year outlook, the 5-year outlook, and the 10-year outlook. And I think that was actually a bigger contributing factor to this rally than a lot of people are going to give credit to, because those inflation expectations are important and the markets are paying very close attention to them. Now, that's really it as far as what has happened in the stock market today. You really didn't get any other news. Obviously, last night you got news that Trump is being indicted, and that is why DWAC is up about 10% right now. And some company specific news. Virgin Galactic no longer going to be in business. Some company specific news, but nothing all too crazy. Yesterday as well, you did see the Fed balance sheet went down by about $20 billion, and that is also seen as a positive thing in light of the banking crisis, and that is also another factor helping to alleviate some of the fear that we were seeing a couple of weeks ago. And it really just comes down to technology being that quote-unquote safe haven, and I would be very careful here, guys. There's very limited upside from where we currently are, unless earnings are just much better than expectations, which looks pretty unlikely right now. So I would be careful personally if you guys are looking at buying, especially your large tech. Not really the place to be right now. I think it actually makes for a very good short right here, and that's kind of what we have been doing in the trading community. Link down below in the description of this video. I put out all of my trades when I put them out in real time. Not financial advice, obviously, but maybe you can use that as a tool in your trading strategy. I hear that's the best way people like to implement that one. So there's that. My paid sponsorship. I guess this video is not sponsored by anyone besides myself. Now, as far as the short interest on AMC, let's switch to AMC here for the second half of this video. And you're looking at a 25.05% short interest of free float, 129.35 million shares that are sold short, cost to borrow average of 407.01%, cost to borrow max of 454.39%, and cost to borrow minimum of 322.5%. So cost to borrow numbers across the board going a little bit crazy here today, and I think that is a safe word to use on them. These cost to borrow rates are very unsustainable across the board. Now, Interactive Brokers has about 10,000 shares currently available to be lent out with a cost to borrow rate of about 180%. So numbers looking very healthy over here, and really just primed for that rally once you do get some news. Really, we haven't got any news or updates on this court situation. We haven't got any news about the Amazon potential buyout of AMC, so we're going to be range bound for a few, and we'll talk about that in just a second. Now, the option activity, you have seen 68 orders totaling $6.55 million, positive order value of 0%. So not very bullish as far as the options are concerned today. Now, let's go ahead and take a look at the technicals for AMC, and like I said, you're going to be range bound in between 450 and 550. Now, I think this does really offer you a potential here for selling premium. Essentially, I think under 450 it's not going to happen. Specifically under $4 it's not going to happen, and probably above around $6 is kind of out of the question until we get some news. More than likely, you're going to be in between 450 and 550 until we get some news. And notice how you rallied off the Amazon buyout. It has neither been confirmed nor denied still, which leads me to believe that they are probably in talks at the very least. You've really been range bound. You have not moved all too much since that news did come out. So the markets are literally waiting around to see what is next with AMC, and that is currently what is going on. As far as the option activity that you're going to be seeing for the rest of the day today and next week, this week you got about 200,000 calls out the money. 15,000 calls in the money, 83,000 puts in the money, and 109,000 puts out of the money. For next week, you got about 8,000 calls in the money, 72,000 calls out the money, in the money puts at 26,000, out the money puts at about 44,000. So some decent option activity for the next couple of weeks as well, heading into April 21st. That's going to be a very large option expiration for AMC. And if we take a look at what the markets are projecting for the next Fed meeting, you are now expecting a 25 basis point rate hike coming May 3rd, the probability on that being 52.4% and a 47.6% chance of the Fed pausing coming on May 3rd, guys. So that is going to do it for this video. That is what you guys need to know. A pretty slow day overall for a Friday. Besides economic data, there really wasn't much else that actually came out today besides Trump dominating the headlines yet again. So that is going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.